This is Mike from Marlin Financial Advisors. In this video, we will be discussing Lisa's situation. Lisa's 65, looking to retire soon from her corporate job, where she was quite successful and has saved a significant amount in retirement accounts. She has no legacy plans and is wondering if she can spend $90,000 a year after taxes throughout retirement. Okay, here we have Lisa pulled up in Right Capital, the financial planning software I use as a financial advisor. She has about 2 million in investable assets, 1 million in 401k, 1 million in Roth, and a house she has paid off and she's looking to keep. Her goals, as we've said, about $7,500 a month in retirement expenses or $90,000 a year. We're going to add in some general health care costs, and we're going to be adding in 2 years of long-term care costs at the end of her plan. This is typical for all plans. She's retiring today at age of 65, not looking to delay at all, and she shouldn't based on what we're going to tell her here. Income, excuse me. Social Security is paying about $3,100 right now if she took right now, and she obviously wants to know if she should delay. No kids, so no legacy plans, and let's take a look at the number. Okay, so here's the number here. So she ends up with a 98%. She's going to have 3.2 mil at the end of her plan in today's dollars. Always make sure this is checked for today's dollars, just so you can see what you're actually looking at here. So, if I uncheck this, right, it's going to be like 6 or something. Yeah, it's like a ridiculous number that people don't understand. I don't know why some advisors don't click this button, but there we go. So if you can't tell, you would think 98% is good, but ending with 3.2 is not good, right? The point of retirement is to enjoy all of your money you've saved. And so we want this number definitely lower. For me, as I've run through a lot of plans here, 80% is where you want to be. Okay, 90%, if you're in the 90s or above, I would recommend you spend more money. If you're in the 70s, I'd probably say, hey, let's save some more, work another year, or spend less, or do something, right? You can get away with 70s, right? As long as you have a lever or two to pull in retirement, as long as you're okay with, hey, if things go south, you need to cut back a little bit. But okay, back to the plan. How much more should she be spending, right? I'm going to give her a number. Hey, really, you can spend up to this much. Good for you. Have fun figuring out what you're going to do with it. So down here, let me touch on this real quick. This is important. Lisa's planning horizon 91. So how did we come to this? With my clients, I send them 3 links to just free online life expectancy calculators. Takes you about 5 minutes. You plug all the information. It gives you a more detailed life expectancy than, like, just say if you were a woman age 65, right? I want a little bit better accuracy so we can do some better planning, right? Also, I have a link in the description, or maybe in the comments. I'll have it, and I have all the free retirement planning website links, resources that I think people should use. And some of them are the life expectancy links for how to calculate that. I think that is critically important and one of the probably first steps that you need to take. So take a look at that if you want it. Let's get back to this though. So Social Security. Let's talk a little bit about that. I can't talk about everything. She also had some question on Roth conversions. The answer was she doesn't need to take any more Roth conversions because she has a million in Roth. But the video will be too long if I talk about that. So let's skip it over that. Social Security. So right now, this is the Social Security tab. It's saying, Lisa, based on the numbers, she should take it 70, right? Why is it saying that? And here's a nice, pretty chart. It is saying that it's purely, well, the numbers will always push you to delay. There's tax benefits, it's guaranteed income from the government, inflation adjusted. Uh, there's amazing it comes every month. There's amazing benefits to it. So it's always going to want you to delay, just from a numbers standpoint, almost for everyone. But it's really a life expectancy question. And we're at 91 years old. Okay. So it's going to want you to delay. Let's find out when the point is where it's going to want you not to delay. Okay, I know roughly what it is. Let's take a look at 83. It's usually around the 83, 84 mark. So let's take a look. So say we say actually we're only planning till 83. Uh what's she doing? Okay, it still wants her to delay. Okay, let's go back. Let us delay to 82. Does that change it for her? Does it saying 69 now? Okay, so for her what if she had a life expectancy of 83 or higher, she should delay just because there's so many benefits there. So there you go. I mean, if you didn't want to run through one of these plans with me or do something on your own, there it is. I mean, that's the answer right there based on all these different scenarios. Now, technically, it's going to change a little bit based on your individual plan, but that's a pretty good generalization there. 83, right? Um, and most people, when they're retiring 60 to 65, as long as they're not in poor health, the life expectancy calculator is going to say you're making until 84, 85. So in theory, you should always delay. Now, if someone came to me and said, "Hey, I don't feel comfortable delaying. I'm taking right now. I don't want to see my investment portfolio drop, whatever." Okay, that's fine. I'm not gonna, stop you. It's not gonna kill your plan. But that is based on the numbers right there, 83. Let's take a look. We're not talking about taxes. Let's just look at stress test. Let's not look at stress test. Excuse me. Let's go back here. Let's figure out how much you can spend. Everyone put your guesses in the chat. There we go. That is the right answer. I've already looked at this a little bit. I'm sorry. Social Security. Well, actually, let's do this. So this is the right answer. 79% you're going to say is bad. Let's switch to optimal strategy on Social Security. And now it's good. Okay. So that was actually a pretty big jump just from delaying. Okay. Now, this might be pushing it since she doesn't even want to spend that much money anyways. Let's do 10,000. It's a bit more conservative a number. 86%. Let's see how much delaying helps her plan. So it went from 80, oh my goodness, 80 to 86%. That's massive. I've actually never seen one that's 6%. Usually it's like 1 or 2%. That's a lot there. So there you go. There's the power of delaying for her. Big indicator that she should do it. Okay. Monthly retirement expenses. Hey, Lisa, you can spend about 10,000 pretty comfortably. So have fun figuring out where to spend 2,500 more dollars, right? 20, 30,000 more dollars a year. I don't know if that's going to be, maybe that's your vacation, couple nice vacations. I don't know. Have fun. Think about donating, whatever you want to do. Really think about that. That's the answer to that question. Social Security, yes, delay. It's going to help your plan out quite a bit. If you'd like me to run this program on your retirement plan for free, please send me an email and I will turn your plan into a YouTube video.